The largest car repossession crisis in history is now. According to studies, 81.4 million Americans have auto loans. Interestingly, 2.2 million of them are repossessed yearly, which begs the question, why is this happening? Even more alarming is that the rate of subprime auto repossession relating to consumers with below average credit scores has seen an 11% sharp increase since 2020. And when it comes to individual models, the Honda Civic and Honda Accord are the two most repossessed car models, while the Ford F-150 and the Cherry Silverado are two of the most repossessed truck models. So, it's really a crisis, and according to observers, it could be the largest in American history. The words auto loan delinquency is becoming more synonymous with car repossession. According to the International Recovery System's Pennsylvania branch president Jeremy Krause, there aren't enough repo men to keep up with the demand for car repossession. The existing repo companies are overwhelmed with the number of vehicles they have to repossess, which worries them. But why is the car repossession rate in America this crazy? Why are consumers losing their vehicles, especially considering the models I've just mentioned? Well, I'll share my findings with you. Here we go. 1. The post-pandemic crisis. At the start of the COVID-19 pandemic, the government rescued most struggling Americans by injecting a $5 trillion cash stimulus, which made lenders more accommodating to those who couldn't pay on time. Now that the stimulus checks are normal, the number of auto loan defaulters is nearing that of the pre-pandemic, which is forcing the lenders' hands. They have no option but to repossess the vehicles. While the pandemic might have shielded car owners from repossession before, the shield is off. Those who can't pay can't blame the pandemic now. If they can't pay up, the lender can invoke the power of repossession to get their money back. 2. Prolonged inflation. Undoubtedly, the sharp rise in the inflation rate is highly to blame for the car repossession crisis. NBC News described the situation as Americans living on a financial cliff to show how serious the problem is. As the American economy slows down and is almost on its knees, car owners can't help but fall behind on their car payments, forcing the lenders to take action. The saving rate has dropped significantly due to inflation. Just over last year, 49% of adults are saving less, which makes it hard for most of them to oblige with their car repayments. That has led to a rise in car repossession and home foreclosures. 3. Soaring vehicle costs. According to NBC News, 1 in every 6 new car owners pays more than $1,000 monthly for their vehicles. That's a sharp rise, given that only in 2019, the average monthly auto payment was $718. So, cars are becoming expensive to own, and for that reason, the lenders are taking them back to try and get their money back. Mark you, it's not just the auto loan monthly payments that are too expensive to pay. We're talking about insurance premiums, fuel and repairs. All these costs have almost doubled, making car ownership too expensive for most Americans. Customers who are too hesitant to let go of their vehicles are forced to overstretch their budgets to keep up with the lifestyle behind the steering wheel, stripping them financially. And again, the steeply rising inflation rate doesn't seem to improve the situation at all, but only creates despair and panic among consumers. According to the Edmunds Car website, car owners who could comfortably pay $500 to $600 per month 2 years ago can't do it now because it is too expensive. 4. Lengthier payment terms. The average auto loan repayment term for the new vehicles is about 69.7 months compared to 68.1 months for used options. The problem with such a lengthy term is that consumers take longer to pay the loan, which means higher interest. Besides, if it takes 5 to 6 years to pay an auto loan, the car will have depreciated significantly by the time you make the last payment. That has seen some car owners fail to pay their auto loan offer after a few years of promptly doing it, necessitating repossession. Wait a minute, I know you're enjoying this video. What about you give me a thumbs up by liking it, then subscribe and hit the notification bell to stay updated on our latest epic videos. Let's continue. Future outlook. Judging by the current repossession rate, the status is expected to worsen, perhaps mirroring 2008-2009. According to Cox Automotive, the high repossession score will likely continue until 2025, and there is likely to be a sharp peak between now and the near future. Since January 2023, 17% of car owners financing new cars have had to pay $1,000 or more monthly, an all-time high. That again proves the situation isn't likely to change for the better. Comparing 2021 and 2022, American car owners recorded $1.46 trillion in auto loans in 2021, which rose to $1.5 trillion the following year. That's about 9.2% of the nation's consumer debt, which is alarming. So we can only expect the number to rise in 2023. What to do to avoid car repossession? A repossession can be a devastating experience, especially when you've become over-reliant on the car. If so, you don't have to lose your car, at least not in that matter. Let me talk about a few things you can do to avoid a car repossession. 1. Immediately make up for missed auto payments. Sometimes you miss car payments out of ignorance, and other times it results from a temporary rough financial patch. What's important is that you take action to stop the repossession. Take advantage of the window the lender offers to make payments quickly if you can, but if you can't, consider option 2. 2. Talk to the lender in time. Don't wait for the lender to serve you with a repossession notice. Once you notice you are late on payments by a couple of months, contact the lender. Explain why you are late and how you plan to make the payment sooner. The lender may suggest a better way to keep your car. 3. Consider refinancing. Sometimes a refinance is a better option, especially when struggling with a loan. It allows you to get the payment to a more comfortable level. Generally, refinancing involves taking another loan with more affordable rates to pay an existing loan. The approval process is often challenging, but you can save your car from repossession using loan refinancing once it falls through. 4. Trade it in a cheaper version. You don't have to keep a car that you can't afford. It takes wisdom to recognize that the vehicle is too expensive for you and opt for a more affordable option. So why don't you contact the lender and request a trade-in? They might be more understanding to grant your request, which means having a car you can comfortably pay for. How to recover from an auto repossession. Suppose it has happened and the repo agents have taken your precious car. Do you sit and fold your hands? Of course not. You can do something about it, and I will share 4 steps that show you exactly what to do. Step 1. Ask why the car was repossessed. Though you expect the reason for the car repossession to be a payment default, you must clarify everything. Sometimes, the cause isn't an obvious one. Besides, the repossession timeline varies between states, ranging from 30 to 90 days. So you can't always assume that it could be something different because you are late on payment by 30 days. Step 2. Ask if and how you can get it back. Once you learn the reason behind the car repossession, ask how you can get it back. That's if you want to. They might extend the grace period, where you can strive to bid to get your car back. If you can strike a deal with the lender before the auction, you may quickly start repairing your credit record. Step 3. Understand your rights. The lender only has the right to possess the car, but not what's invisible. For example, they shouldn't take a laptop, phone, or other portable electronics they find in the car. Also, the repo man can't break into your garage to repossess your car. You should be there when they do it. And if you have concerns about anything, talk to a consumer lawyer. Step 4. Work on your now tarnished credit score. Once the repo agents take your car and it's finally sold, you are left with a tarnished credit score that you must repair. How about you start rebuilding it? You can start by planning to repay the bank whatever balance you owe. Remember, the lender can also sue you, which will mean double loss: the car repossession and a lawsuit. From what I've shared, it's clear that America is in a car repossession crisis today, arguably the largest we've seen in history. I hope you are now aware of what to expect concerning the matter. In the meantime, check out this other video titled Toyota CEO releases 4 new models that you love. See you there.